ONDC does take away the single platform control for restaurants and gives them better visibility. And I spoke to a few experts who say that the unit economics are definitely better for restaurants on ONDC, while they currently don't make money on Swiggy or Zomato. And the low prices are obviously more attractive to the consumers. So ONDC is likely to emerge as a third alternative for restaurants and consumers and could maybe take away about 10 to 15% of the orders from Swiggy and Zomato. And this could potentially even force both these platforms to relook at their high commission and other charges. But what is more important to note is that the current discounts, experts say, on ONDC are not sustainable in the long term. Food delivery also has several factors at play that make it a seamless experience. Things like speed of delivery, being able to handle high volumes, especially at peak hours, having a superior tech, making it seamless, and also capturing data. And more importantly, customer trust that the food will be delivered as promised. And if issues arise, what part of the ONDC network will be able to resolve that dispute seamlessly? These will be key for ONDC to succeed going forward.
All right, Shilpa, many thanks for telling us how ONDC could be a game changer in the e-commerce sector. Moving on, Capria Ventures, a global South specialist venture capital firm, has marked the first close of its target of $100 million fund. The new fund will focus on investing in 20 to 25 tech startups in the entrepreneurial hotspots of India, Southeast Asia, Latin America, the Middle East and Africa. The fund will focus on generative AI and climate startups. Joining me now is Will Poole, co-founder and managing partner of Capria Ventures. Will, welcome to Startup Street. Capria's fund too, like I just mentioned, has an added focus on generative AI and climate technologies. Will, what interests you about this space and the opportunity it presents?
Look, very simply, last time I was on this show, the world was different. GAI has come onto the world very quickly. And it, frankly, for India, it represents the most to gain and the most to lose as a country in the global South relative to embracing generative AI. It's going to create better jobs and it's going to destroy jobs all at the same time.
Right. Will, you've already closed investments for the new fund in a couple of startups in Mexico, Brazil, Nigeria and Egypt. If you could talk to us about these startups and their area of expertise. Also, what is the ticket size of your investments?
Sure. Our initial ticket sizes are between 1 and 3 million,
okay.
And then we'll double down as many venture firms do. And let me give you a great example of one that we invested in India just recently called Bharat Agri. They're a farmer services advisory firm, and they actually are already employing generative AI to make their interface and communication to farmers more cost effective. And in a very small amount of time, they took between 20 and 30% out of their customer service costs. And they'll soon, by the end of the year, have 50% less customer service costs, enabling them to serve more farmers with this high-quality information, building an e-commerce business in India very rapidly. And that's all made possible or made more cost-effective because of generative AI.
Okay, all right. You also plan to invest in 20 to 25 startups with this new fund, mainly the Series A and A+ rounds. How soon do you hope to achieve this target, and will they be sector agnostic?
Yeah, we have a couple of sectors that we really like. I mentioned ag tech a moment ago. We think job tech is incredibly important for the entire global South, India in particular. We also look at fintech. That's currently about 40% of our portfolio across the global South. So those are some of the leading sectors. And it'll take us a good couple of years to deploy. We're not going to be in a hurry. The market right now, as you know, is a bit soft. So we're going to be very choosy, pick the best founders, make sure that they're funded for maybe 18 to 24 months of runway. And then help them grow those businesses.
Okay. Will, let's now talk about the India and the Southeast Asia startup ecosystem. India has over 20,000 startups, and Southeast Asia's venture capital investment is on the rise, with the internet economy now projected to reach $330 billion by 2025. However, there are, economic headwinds, and like you just suggested, so how long do you expect this winter to last, and how soon do you see startups emerging stronger?
Well, look, I've actually been in the venture business since 1991 as a founder back then in e-commerce. And some of the best companies are actually born during and after downturns. So the early stage investing is still happening. It's alive and strong in India and Southeast Asia, in Latin America and Africa. We see very competitive deals getting funded. It's happening. They take a little bit longer, but it's definitely happening. the real issue is on the later stage deals, right? And those that have public market equivalents that have been hammered. People that are funding in that space are having a rougher time. The founders are taking longer, and they're having to really show they have great unit economics and great businesses before people write them a check. So I think we're going to see continued strength in the early stage venture capital. We're going to see softness in the late stage venture capital for maybe another 6 months or so until things start turning around there.
Okay. Will, can you now talk to me about your investment thesis? How are you different in terms of your offerings, which is mentoring, collaboration, and training?
Well, look, let me begin by saying that we're global South specialists, and there are very few in the world who are, in fact, just that. We don't invest in the North. And we've been doing this, one of my partners, since 1999. So we've seen a lot of what happens in growing an ecosystem across the global South. The second is we're focused on these early to early growth startups, and they serve the fastest growing countries of the world. From a GDP perspective, about 800 billion of 2.7 trillion in this year alone is going to come from the global North, and the balance comes from China and global South.
Okay.
There's a lot more money to be found, literally absolute GDP growth over the next few years, 70% is going to be in the global South, and that's where we play. And then the final real differentiator for us is that we bring our founders into a global network of like-minded founders. And what we found is that the founders, of course, are exceptional in the global South, but they're more spread out and they're not as connected to one another. So we can bring that connectivity and help them each be smarter together as they compete and build businesses in their own markets.
Okay. Well, before I let you go, one final question. Talk to me about the India opportunity. You mentioned that, you've already invested, in Bharat Agri recently. Talk to me about the future startup opportunity in India, and are you in talks with more companies here?
Yeah, absolutely. We actually approved one in our investment committee just last week that we're very excited about, that services the growing need of individuals buying and new apartments and outfitting them and getting going. We see plenty of opportunity, and again, globally, the early stage is hot. In India, it still is hot. Deals are taking a little bit longer, but we're there. We're looking at deals every week. We have partners on the ground here, 3, in fact, firms that we use to help source partners through. And we're very proud to be working with each of those companies to find great founders here in India. So we see India plus Southeast Asia will represent up to 60% of our investments from Capria Global South Fund too.
All right, Will, it's time for me to wrap up this conversation. Many congratulations on your fund too, and it's always a pleasure talking to you. Many thanks.
Thanks. Nice to see you as well.
On that note, it is time for us to head into a short break. But coming up next, ZestIOT has raised $6.5 million in a Series A round. How does the company plan to spend the funds? We put the company's founder on the hot seat to find out more. Stay tuned. Welcome back. You're still with us on Startup Street. ZestIOT, an IoT and AI-powered aviation platform, has raised $6.5 million in a Series A round led by Capria Ventures. The round also saw participation from Loyal VC. Founded in 2016, the company's ground radar platform works towards increasing the speed of aircraft turnaround while maintaining operational efficiency and safety. Now, ZestIOT currently manages over 600 flights, 600 equipment and 9,000 personnel daily. Joining us now to discuss the fundraise is Amit Sukhija, the founder and CEO of ZestIOT. Amit, thank you so much for joining us on the show today. Like I said, you're an IoT and AI-led technology platform which digitizes operations for the aviation industry. Take us through some of the use cases.
We all take flights, and on-time performance of flight is very important from passenger perspective. For each flight, the moment it lands on the ground to the point it goes back in air, at least 60 plus operations are performed by human using different machines and multiple parties coordinating for collective turnaround of the aircraft. For this, visibility of the entire operations is a big problem. And as a result, when there is a delay, then the ability to avoid and recover is very minimum. And imagine at a large airport like in India or in Middle East or in US, where 250 flights are undergoing at any airport, how much chaos it may create. So from that perspective, IoT and AI digitize every last mile operation for every operation of the flight, and as a result, create a real-time visibility. This is one of the super use case in terms of multiple parties operating together for quick turnaround of the aircraft, and visibility helps avoid the delays.
Absolutely. But Amit, how do you plan to spend the new funds? What can we expect in the coming year from your company? How big is AI going to be in building out your tech?
That's a great question. So first of all, the success of this goes to customers. And at the same time, we were very much limited to how this technology can be given to more users and more customers in a faster and in a cost-effective manner. So most important investment is going to be on double down of our deep tech innovation, as well as expanding our talent base and taking this product across the globe. So for that, we want to make sure that today, from our platform handling 600 flights each day, empowering 9,000 plus manpower for one single customer to take it to 10 customers in next 12 to 18 months. And similarly, this use case has been applied across manufacturing, oil and gas, and food and safety companies as well. So there also we plan to empower by bringing this technology in their hands and helping them innovate and deliver more products with a better quality and ultimately improving their bottom line for their business.
Right, Amit, we'll talk about all those other sectors in a bit, but talk to us about your revenues. What are you clocking? What are the targets that you've set for yourself for this year?
So right now, for the last 2 years, consistently, we have clocked more than $1 million revenue. And most importantly, we have been profitable, which was the most important essential part of our business. And from there, and with joining hands and most importantly, mindset of Cap, Vikram and Ashish, which they bring to the table, last 9 months, we have built a highly scalable business plan. And as a result, we expect our revenue to cross 10x in the next 2 years with their partnership.
Right, so you hope to have your revenues cross 10x in the next 2 years. Now, you're currently servicing the aviation sector, but also, like you just mentioned, have some solutions for manufacturing and oil and gas as well. So take us through what you're building for these industries and where do you go from here?
Various use cases in terms of assets counts to inventory, to the safety, to the security, to the SOP monitoring is a complete digitization wave we have undertaken with one of the largest PSU, which is one of the largest initiative across India as well. And it will be implemented across 80 plus locations, and for each location serving more than 60 different use cases to automate and make their operations safe and secure. Similarly, in steel plants, everything is time and money is what our customers, CEOs tell us as well. So how to make sure that we give them more return on their assets investment and helping them reduce their cycle time of producing the steel. And in one of the case, the efficiency customer clock was more than 35%, which was a delight. And they literally distributed sweets on the ground because the manpower on the ground was also very happy with the empowered decisioning by our AI-based tool. So that's the space we operate. And similarly, in the food and beverages space, every product which is coming out of the production, it is automated. AI and the vision technology is helping them automate and reduce their cost of quality, as well as making sure that their productions are more and the return on the product is very less.
All right, Amit. And you also said you want to build in India for the world. So what's the global expansion plan looking like?
Great. So first of all, it was a big challenge for any company coming from India, from aviation, building a product for the international market. And I would say that a lot of credit goes to number of accelerators we have worked across India as well as US, Middle East as well. And as a result, we have built the product brick by brick, and we have constantly innovated on solving the problem. And as a result, some of the largest airports in Europe selected our technology, and they have given us the contract to deploy it as well. So that's a kind of, let's say, a new journey we have built together with these customers and taking this product, Make in India, to the international market.
All right, Amit, so big expansion plans there in the global markets as well. Thank you so much for joining us on the show, and we wish you all the best going forward. And moving on, Ritu, you've got another fundraise for us from another interesting company.
That's right, Arundhati, and this one is credit card platform Kiwi, which has raised $6 million in pre-series funding, and it also plans to launch a credit on UPI solution through the Kiwi app by issuing RuPay cards in partnership with banks. Now, this app is expected to go live by mid-May, and the company hopes to onboard 1 million users in just the first 18 months. So to talk to me about that, how the company plans to go about this is, and create a D2C-like model in the credit market, really, is its co-founder, Siddharth Mehta. Siddharth, thank you very much for your time here on CNBC-TV18. Are these two connected? You're raising the 6 million pre-series funding and now deploying that to onboard about 1 million customers through this app that you're going to launch.
Thanks, Ritu, for inviting me to Startup Street. You're right. So the way this came about is that everybody knew that UPI is the reason why digital payments have grown, and they've grown substantially over the last 5 years. We always were waiting for the credit layer on UPI to come in force, because credit on UPI will change the credit card industry also. It will completely transform that industry. We were waiting for it. We were always clear that we want to launch a product which is credit on UPI. Once RBI announced it last year, we obviously sat together, all the founders, put the product proposition in place, and then we went ahead with our fundraise to target to get to 1 million customers in the next 18 months, providing them a single platform on which they can do credit card on UPI transactions.
What kind of credit disbursals are you targeting through the app in these 18 months? And I understand you've already opened the wait list as well. How many have you got? How many users in the wait list already?
So, Ritu, because it's credit card on UPI, the way we are looking at it is we want to issue 1 million cards to customers and get decent transactions on this is the focus that we have over the next 18 months to build engagement and issue the cards. On the wait list, we've hit more than 22,000 wait list as of a few hours back, and we hope to cross 50,000 in the next few days.
All right, that's some big numbers. But Siddharth, we're already seeing some big players like Paytm, even the likes of MobiKwik, offer credit on UPI through RuPay cards. Plus anyone with a RuPay card, thanks to RBI's new rules, can link it with their UPI app, use it for credit. There's bank credit via UPI as well. I just wanted to understand, what is the space that you're trying to fill, and what is the opportunity for Kiwi in this space?
So I'll start with the basic point, Ritu. If you look at RuPay credit card penetration in the markets, it's around 5%. So that itself is a large opportunity. Now look at credit card market. There are roughly 30 million users who have unique users who have a credit card, whereas there are 300 million unique users who have UPI who have used UPI. So the market itself is big. The second thing that we are doing here is that today when you take your credit card, you apply for the credit card on one platform, you use it on another platform for transacting. For example, if you, as you said, MobiKwik and other partners, you need to link your card there, and then you can use it. you basically manage your card on the banking app, and then you make bill payments on the fourth platform. What we are doing is building all that on one single platform, which is the Kiwi app. So you can apply for a card, get it in 30 minutes, link it instantly to the UPI handle on Kiwi, start transacting, manage your card, which is your limit, block your card, so on and so forth, and eventually also make your bill payments on the platform. So you will not need to go anywhere outside Kiwi for managing the card end to end.
Sure. So but if you'd explain to us how the revenue model for the Kiwi app would work and what kind of margins are you going to be working with?
So the revenue models will evolve because this is a nascent market. Credit card on UPI is just got launched and transactions not happened. The ecosystem is going to evolve. So our revenue models with banks will evolve. But I can make one point that from day one we will be revenue accretive. So we will start earning revenue from the first card that we issue to customers. But these models will evolve. So we will wait for the models to evolve over the next 18 months.
Okay. Okay, but in the meantime, Siddharth, other than this credit on UPI, of course, which is one of your key offerings, will there be other features on the app? I mean, what are there other things you try to cross-sell customers, for instance?
No, our target is very clear that in the first 18 months, our focus is to get to 1 million credit card users. Use the credit card base for RuPay. That's our focus there. And customers can also use their savings account. So we are not going to be only restricted to RuPay credit cards. Customers can also use their savings account for P2P transactions, for making payments to their friends and family. That's our focus. We've not thought about cross-sell as of now. I think the clear focus, as I said, is 1 million cards in 18 months.
Of course, RBI said that this credit on UPI will start with RuPay. So, of course, the understanding is that it will be linked to other card networks as well in future. So, we understand where you're going, but, your target to become the leading issuer of RuPay credit cards by 2026. Just tell us how you plan to go about this strategically, and are you already in talks for partnerships with banks to extend beyond RuPay cards as and when RBI allows that?
So, yeah. You're right that we are sort of going by the RBI directive. Currently, the directive is RuPay credit card, so we're just focusing on that as of now. As the directive and the regulation evolves, we will talk to banks in the future. But as of now, focus is very clear because RBI is allowing credit card. We just focus on credit card and get that to you.
All right, Siddharth, thank you very much for your time here and for telling us about this interesting new startup that you've had. It's been a pleasure speaking with you, and thank you for your time here.
Sure.
All right, with that, it's time for us to wrap up this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.